Binance has announced that stock tokens will be unavailable for purchase on its website effective immediately. The exchange said it's stopping support for purchasing tokenized stocks just 3 months after launching the product. In an announcement, they said the decision was made so that they can focus on other products. Now, this comes amongst news that Hong Kong is the latest jurisdiction to warn the exchange about its operations, specifically raising concerns about stock tokens. So, Naomi, I'm going to kick this off to you. Just 3 months ago, we were all very excited about this new offering. 3 months later, Binance is in regulatory trouble. It seems like all over the world, and tokenized stocks have come to an end on the platform. What do you take away from this?
Well, I think it's important to keep in mind that Binance isn't pulling this product because people didn't want it. They're not pulling this product because it's not a good product or it's not interesting. They're pulling it because governments around the world are like banning Binance, and they're not even banning their particular, stock offerings. They're saying, actually, Binance itself isn't regulated. We've decided, and it just goes to show you, Binance has been pushing the boundaries of what they can get away with in terms of, this jurisdictional arbitrage. They've been really, moving this crypto horizon and opening the gateways to a lot of people. And they've been pressing a lot of buttons, and it seems that offering synthetic stock options was just one button too many, and this was the one that just caused the bucket to overflow. So I think that has caused a lot of governments to scrutinize them more closely. And, you had the UK turn around and say, well, no, you're not licensed at all, and you need certain licenses that we haven't approved you for, so we're shutting the whole thing down. CZ responded and said, no, actually, you're just referring to markets, which is these synthetic stock options. That's the thing. But, you've shut down everything. You've issued warnings about it all, that, this is an incorrect understanding of how the platform works. But it doesn't matter. It just goes to show you that even if Binance toes the line in all the other areas, these governments are going to be using the leverage that they have to, basically force them into compliance, and not just by shutting down the things that they don't have license for, but just saying, okay, if you don't comply and, just offer things that we think people around the world should have access to, we're going to just shut you down entirely. We're going to issue warnings. We're going to say you can no longer offer services to people in our jurisdictions. I think it's super sad. And I think that if nothing else, it just signals how much we need decentralized exchanges that can't be shut down. And that's really my biggest takeaway from this. But Ben, I'll throw it down to you.
Yeah, I think I was really interested in this in a variety of ways. We're seeing sort of Binance continue to experiment. We're seeing regulators react accordingly because sometimes experiment happens a little bit too fast. I can't say I'm super surprised. Like, we heard inklings of this earlier in terms of regulators looking closely at this and trying to understand it. And Binance was working with them. They were open about this aspect. What I think is curious too is maybe the sort of tail end of the article on the stoppage of the issuance of stock tokens is that people in the European economic arena and like Switzerland can migrate these stocks that they own to a new platform that their sort of German partners seemingly building out. So this isn't going away per se. And I think that's really interesting. It's like, where are these being supported? Who's going to have access to them? And it seems like they're going to continue to exist in some way, shape, or form. And I think that's actually pretty interesting, because my first question was, okay, well, what happens if you purchased a bunch of this, right? Like, are you going to, just have it taken away? Like, can you cash out? Like, what's the deal here? But it seems like another platform is being built to support these things, albeit, on the German side. So that is going to be interesting for me to watch, because it shows this isn't going away entirely, despite it being a much, lower scale of who could actually have access to it.
I have a quick question. You guys are using the term synthetic, but are these tokenized? They actually did have the stock, right?
Yeah, these are tokenized stocks. Yeah. These are tokenized stocks. They had a broker. There is a synthetic thing in the Terra ecosystem where you can get actually synthetic versions of popular stocks. But this one did have an intermediary that was actually doing the and synthetics itself. This one, there was a firm that was actually providing the stocks on the back end. But back to you, David.
It's a fascinating discussion later. My only thought on this, it's really interesting that the Hong Kong warning came when it did, and then this happened, because I wrote about this a little bit. Hong Kong, obviously a huge financial center, but they are kind of facing down growing problems because of Chinese political control. And so, this is pure speculation, but I do wonder, because Binance is not a Chinese company, but it's kind of a Chinese company and a little bit vulnerable to pressure from them. So I wonder if this might have had some connection to a specific defense of Hong Kong financial markets. That's pure speculation, but interesting coincidence.